Hello, pranam to all of you. I am PN Murthy. I want to explain about accounting concepts and topics. So that first, what is accounting? Accounting is an art of recording, classifying, summarizing, analyzing and interpreting day-to-day business transactions in a systematic manner. So first of all, what is accounting? Accounting is an art. Art means what? Practice. More amount of practice is required day by day. If a person who is practicing more and more times, automatically he can come to know the what type of adjustments are required. Okay, if you are not having any more practice, then after some period you can forget. So accounting is a practice. So thereafter, accounting is a practice, is an art that recording. Recording means human memory is very limited. So nobody can save the day-to-day transactions of a business of 365 days. All are those in his mind because God given us a limited memory. That's why we have to write it in a particular place. It may be in laptop, it may be in a register by a specific period. By a particular person with a systematic record is known as recording. Shortly we can say preparation of journals or preparation of subsidiary books is known as your recording of transaction. Thereafter, classifying all the transactions of 365 days we will enter in one single book. So thereafter we need to classify those things in individual accounts. That is known as ledger accounts, is known as classification. Finally, why accounting is preparing to know the profit of the business, whereas the position of the business means short-term financial condition and the long-term financial condition that can be determined only by preparing accounting. So the third case of accounting is known as preparation of financial accounting, that is summaries. Summarizing means giving the results. Accounts will give the results of the business of entire 365 days. What the transactions are made in the business, that can be identified, that can be given in the result in the form of financial statements, is known as summarizing. The businessman can come to know whether he made profit or he may get loss or no profit, no loss. What is the position of the profitability, he can come to know by preparing accounting only. So thereafter, what is the position of the business? That means the assets are how much, liabilities are how much, credits are how much, means loans are how much, what is the capital position, etc. These things be calculated only by preparing accounting. This is known as summarizing. Thereafter, analyzing. Analyzing means year by year we are preparing accounting and the past records and present record we can compare. That is known as analyzing. And finally, interpreting means the changes in results, means the causes and effects of changes in results are known as interpretation. These should be the accounting meaning. Here, accounting includes so many terms. That means recording, thereafter classifying, thereafter summarizing, thereafter analyzing, thereafter interpreting. All the things are going under accounting. If we prepare these all, this is known as accounting. This is the meaning of accounting. Accounting is an art of recording, classifying, summarizing, analyzing and interpreting the day-to-day transactions of a business in systematic manner. So students, we will come to know that what is the meaning of accounting. Accounting is an art. Art means what? It is a practice, required practice. Every man can be specific, or what? Every man can be a specialist after doing some practical works, practice. So every day they have to make accounts regularly, then only he will be a genius in accounting. That's why it is a practice. Practice is known as art. Thereafter go to classification, means recording. Recording means what? Writing the day-to-day transactions in a systematic manner in a particular book. It may be a record or it can be in a system. So that recording means what? All the day-to-day transactions of the business we have to write in a particular book by a specific person. Okay, no means always human memory is limited. We are not able to memorize all the day-to-day transactions of the business of the 365 days. So that we should write these things in a particular book. That book is known as the record of journal. Okay, otherwise we can say it is subsidiary book also. We will discuss in the future classes about those things. But primarily, recording means a preparation of journal or preparation of subsidiary books. Thereafter go to classification. Here classification, that means all the transactions are recorded in a chronological manner in a particular book. Now we have to classify these things in individual accounts is known as a classification. Thereafter, summarizing. Summarizing means finding of profits and results of a business is known as summarizing. Clear? So whenever the business prepares these accounts, for what purpose? For making profits. This is the main motto of a business. So when a businessman prepares his business, so that it will they are worrying about the results of the business. At the end of the year, how much amount of profit may be arises, that should be determined only by preparation of final accounts. So that financial statements are known as summarizing. Thereafter, go to analyzing. Means the day-to-day transactions of this year and last year and previous years, or we can compare this year's statement with other type of, means other same type of business transactions, financial statements. So we can come to know whatever may be the sale, whatever may be the profit, whatever may be the cost of our company, and what with this year, this current year, and we can compare this with the previous years of our company or other business organizations statement, so that we can come to know where we are committing mistakes. Or thereafter go to interpretation, means the causes and effects of differences and changes in the day-to-day operations is known as interpretation. So that these are the transactions which should prepare these things in a particular organization in a systematic manner is known as accounting. Thereafter go to significance of accounting. So in this case, significance, that means it is an art. First point, it is an art. Art means practice. Every person, every accountant must be, after certain period of practice, then only he can call as accountant. Means without practicing, nobody can know accounts perfectly. That's why it is an art. Art means practicing more. And thereafter, next one is recording. Recording means what? Writing the day-to-day transaction, means a purchase of goods from Syam, paid cash to Harish, and introducing cash for business, that is capital, means introducing started business with cash, on introduction of cash for starting business. So these are all day-to-day transactions. Means in 365 days, so many times we have some more transactions. Means a number of transactions, more number of transactions. We can't write these all, we can't memorize these all in our mind. So human memory is very limited. That's why we have to write in a particular paper, particular big book, that is a record, or you can say it is in a system. You can write in the laptop or your desktop, etc. in a systematic manner. That is known as recording. So shortly we can say preparation of journal is known as recording. Thereafter go to classification. Means a one person's account, means in a one person's account should be arises so many times in the 365 days, so that how can we conclude what amount of balance he has to pay to us, or how much amount of money will be payable by the business to him. We can't understand that. That's why we have to prepare individual accounts on their individual names. So when Ram's account separately we have to write, Shyam's account separately we have to write, purchase account we have to write separately, sales account we have to write separately. Whenever we are doing these all individually, so at the end we can come to know what amount of money we have to pay them, or what amount of money we have to receive from them. So we can understand these all. That's why we have to prepare classification. Finally, after completion of this, we will prepare a trial balance for verification of accounts. We are preparing the account whether these are correct or not. To know that, we can prepare a trial balance. We will discuss thereafter some classes, those things. So thereafter, next one, fourth one is summarizing. Summarizing means after taking these all classification, means ledger accounts into one place, the summary is known as trial balance. That trial balance information will put it in a particular statement, that is known as financial statement, should be prepared at the end of the year. At the end of the year, to determine either the business may earn profit or may suffer loss. To determine that one, we have to prepare final accounts. So it is having two more statements. One is income statement, and the one is position statement. Income statement is known as preparation of trading account, profit and loss account, whereas position statement is known as balance sheet. The balance sheet is prepared at the end of the year to determine the position of a business. Position means what? What type of position it is? Just the financial condition of the business, that means short-term financial condition as well as long-term financial condition, and what type of strength is there with the business. That means capital is how much, liabilities are how much, assets are how much, okay, and long-term liabilities are how much, etc. So finally, when these are we can calculate it after completion of the balance, it can indicate the status of the business, means the business is in good condition or it is in poor condition. Okay, we can understand. So this is known as summarizing. Thereafter go to analyzing, means these financial statements when we are prepared, it should be compared with the previous year's financial statements. It should be compared with previous year's financial statement. These financial statements can be compared, means this year's sales is how much, purchase is how much, expenses are how much, profits are how much, like that. It can be calculated with the, compared with the previous year's or some previous year's statements. That means like that previous year sales is how much, what percent of sales increase in now, what percent of cost increase in now, what percent of profit change in now. Okay, these analysis is known as analyzing the accounting. Thereafter, we can come to know the interpretation part. That means what? Why these changes are affecting, means that changes of effects, means causes and effects of change in your financial position is known as interpretation. So this is the actually significance of accounting, means in the accounting these should be there. After that, we can come to know what should be the result, what the accountant has to do, and what the accounting suggests to the management for taking good decisions. Thank you all.